Hey traders, it's 24/7 Pips. I got this question up on Instagram and it's a really good question. Basically, let's pull it up here real quick up on Telegram. So he sent me this picture of this chart. Basically, this is a trade that he got in, I'll end up highlighting it on the video, but basically, you have some highs, your lows, and this was a trade that he took. And basically, he was like, does this stop loss hunt also happen to you, right? And frankly, yes, it does. So let's get into the idea of why these are happening, these things, what's taking place, in the market when these things are happening. So there's actually other people who send me this message like, yeah, it happens all the time to them. So let's just touch into this real. Okay, so this was a trade. This is a trade that I ended up taking. I ended up sharing on Instagram. If you're not following me, follow me at 24/7 Pips. But I ended up sharing this trade, and actually, my broker closed an hour earlier than the actual market close. So I didn't actually get all this gain yet. But when the market opens, it will adjust. But basically, let's just talk about it. So this is a case where we might have probably had a stop out where if the market just pulled a little bit higher, but that's not the case here. This is not the specific case I want to talk about. But even if this did pull a little higher and stop me out, I would just have to accept that as the loss and either re-enter the market on that bearish candle, because that still does close in range. Everything is still valid, even though the stop loss might have been pulled, because we're still making lower low structure, right? Like we're still on those lows. We haven't broken this high, we haven't broken this high, we haven't broken this high up here. So as long as those things are still in operation to the downside, I'd look to capitalize on that, right? So that closing back bearish would lead me back to the downside. Now let's just go over to some other examples that we might see. Let's just actually pull up a trade I took. Okay, so here are some trades that I basically just sent to myself, I basically take the screenshots, and then I just follow them up. Basically, we have some trades around here. So this was one of the trades that I ended up sharing on the YouTube channel. I go over some of the trades that I just end up recording. But we have this trade that ended up being a really long winner. But right before that, we have some losing positions. So if I just pull it up here, this is me just marking up the market. So this is just me breaking things down. We have a push to the downside. We're breaking those highs. So in my head, the liquidity of the market is being grabbed. Any sellers around this area would be losing money. Even people that now see this as a breakout and they're like, hey, let me buy the market, whatever. They come into a negative state once that downtrend comes back in, and all of these sellers have had a point of losing, and then these buyers here would be having a point of losing as the market falls back into the main trend, right? All the bearish pressure that was happening previously, we're looking for that to come back in. But in this case here, let's just take along. We see that yes, we did consolidate around this area for a little, and that's where our risk management comes into play. We're still able to exit this trade to a profitable degree, even though it doesn't go full profit, like it's very minor gain. But we still come back up for a stop out, right? Even with the next position here, we look for further downside and we just come back out for a stop out. Let's see if we have some other examples. Okay, so we have these pictures right here where we basically have some, okay, let me say this first. This is GJ, the 5 minute, this is the 1 minute up here. This was sent at 3:57 a.m. and this was sent at 4:40 p.m. So a lot of time has passed in between. But given this case right here, we can basically just see that what we had some downward pressure. Looks like that position was a success because we have hit through the bottom. As we came back up to this market, we had the high and the low identified. Like I mentioned before, we're performing that liquidity grab area, that stop out area, that stop hunt thing. It is a liquidating factor of the market. It's something just part of the process, right? So this is something that we have to work with, and either we have to have a part of our plan something to allow us to get back into the market? Are there continuing trend factors, or are you not going to get into the market? The person that asked this question actually just told me that, you know, he doesn't get back into the market, he just lets the whole opportunity pass. But I think one of the benefits I also try to do is place my positions in these liquidating factors, because you have to remember that a long time ago, when the markets were more of a physical thing where it wasn't so digital, our orders had to be filled, and one of the best times to get your order filled is when a lot of people are giving up orders, when there's a lot of sellers and stuff just like that. It's easy to buy something when there's a lot of sellers. So this is that case in the market where, like I mentioned, we have a resistance right around here. So you have a lot of sellers in the market selling this price, and as soon as price breaks above that, those sellers become into a fearful state. And then you have a lot of people saying, okay, this is a breakout, let me hop into the market. So they're going to try to get in their buys and ride the market. Apart from that, I personally am remembering the bigger trend, that the whole thing is actually moving on a downtrend. No matter what distraction, what manipulation might be going on in the lower time frames, I'm aware of the higher trend, and I'm looking for opportunities to go back into the higher trend, right? So when price goes to those extreme areas that I have marked up in the market, I look to enter my position back into the direction of the main trend, and that's where, you know, we'll still have positions that end up getting stopped out. If we were there to update our analysis, we would have measured high to low again and then got an E1. Even this trade here, like, we would have had our position at the 161, but I personally just didn't take that trade, right? So we just lost one position on the 127, and then it ended up stopping out, right? Let's look into why this might happen and what we can pull from these situations. Okay, so let me just I'll just do this. There's a few things that we got to think about. Most importantly, what comes to mind are things just like, what is my actual return rate? We'll know that this means return rate. Okay, yeah, return rate, right? So out of, let's say, 10, 20, 50, 100 trades, if you just took 100 textbook trades, you know, no feelings attached, no expectations, you just want to see what this does. If you go through, do that, see what that number adds up to. What does that number add up to? You know, do you have a 60% win rate? Depending on what your plan is, okay? Don't try to develop the plan from this point, you know, just whatever you're working with at that moment, figure this out. Like, this is necessary information, need to know information, right? Apart from that, you need to know, what is your average risk to reward? What are you normally going for? What is your idea that you have in your mind for your risk towards your reward, right? Let's do risk. Writing is terrible, but hey, risk to reward. So let's say you're risking 1 for 2, right? So all of your, you know what, I'm gonna make that a little worse, because a lot of people are doing a lot worse than that. So let's do risk 1 for 1. So every dollar you risk, you're only trying to make $1, right? So these are two very important pieces of information, because this, let alone off the bat, lets you know that your return rate is going to be 60%. These two things will tell you that your win rate would be. The next thing that we have to consider is, what is our risk percentage? Risk percentage. This number is very important. Are you risking 1%? Are you risking 10%? Are you risking 100% of your account on every trade? If this is what you're doing, you're running a high risk count, and there's no way of continual success if you're risking it 100%, because your win rate, right, your return rate is going to be less than 100%. It's going to be less than 90-80% when you take your trade, right? So what is your risk percentage? Made a video on this recently where we went through and answered some questions, but you know, we should be risking about 2% or less on every trade, right? This allows our averages and everything to play out. So if we ever go through a losing streak, which we don't know when will happen, we don't know when a continual series of these stop outs will happen. If, you know, we go through something in life, or we go through something on the charts, you know, you risk too much. Let's say you risk 20% on one trade, and then You start to feel some emotional damage when you lost your trade. You're like, oh, I wasn't really expecting to lose that trade. But if we keep this number down, this risk percentage, then these losses that we feel, they don't feel that much, right? They feel less. So the point that I get across is that personally, I think that this should be around 2%. You need to 2% or less, right? You need to be able to sustain the losses, because survival is number one importance. You need to put your foot down and say, I need to stay in the market. I need to keep playing the game by not losing all my money. Okay, so apart from that, determine what your trading plan's return rate is. After that, I would say figure out what your average risk reward is. So generally, I think you should have at least risk 1 for 3, right? Keep it at a minimum, some standards. Anything above that is super duper great. Anything below this is not worth it, so at least do 1 to 3. And then apart from that, after you figure out what these numbers are, then you go through and you figure out what is the return rate of this actual plan that you're running right now. When you figure out what this return rate is, then you can go through some filtering processes, whether that's going to be, if you trade indicators, I'm not even going to say that, but whether you want to use higher time frames, whether you want to reduce the amount of time you change the trend that you look to trade in, whether it's using sessions, do you want to be active at different times, do you want to look out for different things, certain highs and lows that are made for the day, continuing trend factors. All these things can be altered and modified to change the return rate of your actual plan, right? The actual skills that you have. So yeah, these become the most important information that we need to be looking out for. So just quickly on the charts, think about these things when you're entering the market. There's obvious things, when we see these highs and lows, when we see this fast pressure in the market, we need to determine the major trend of the market. And in my head, when we see these highs and lows, we know these highs and lows can be pushed apart a little and continue back in the main trend. Some type of manipulation, some type of trickery the market, liquidating the people, making the people lose to some degree, as these we have a main trend, we have these lower lows, the fake lower lows that are in right now, and then as these higher highs start to come back in, when you see the main thing, if we zoom out, we can see huge push to the upside, retracement, consolidation, extreme push to the downside, and continue back up, right? And the more we zoom out, we can just see more bullish pressure coming from. So these are just things that we can look for, just looking for the main trend, following the main trend. We have a few traders that said they've been profiting, just by taking a look at the weekly time frame, like I've been suggesting, and following that. Okay, go in the direction of the weekly time frame, ride that wave, do that thing. But that's all for this video, guys. Thank you for tuning in. I will catch you in the next one. Follow me on Instagram for more, and I'll catch you later. Peace.